giving feedback on the North Star Managed Fund for the year ended 2022. It was actually a terrible year for investors globally on markets, as offshore assets really came under extreme pressure. South Africa actually did a bit better than global asset classes. The All Country World Index actually returned minus 13% in Rand terms for the year. Global bonds did minus 10%. The CAP Swix, however, the South African market was up 4.4% and South African bonds up 4.2%. Property had a rather timid year at 0.5%, whereas the best performing asset class was actually South African cash. As interest rates rose, it returned 5.2%. The fund's composite benchmark returned a very paltry 0.42% for the year, and the fund did close to 1.6% return, close to 2% return for the year. So significant outperformance against the benchmark. The peer group mostly was negative returns for the year, so the funds beat the peer group as well. What did we do right? Well, we were underweight global exposure, and that we did into 2021, the back end of it, and we continued to reduce global exposure through the year. That worked well considering the underperformance of global assets. We overweight South Africa and fixed income in particular, and that worked well in the fund. We had limited to no property exposure through the year, considering the underperformance of property. That worked very well. And we had exceptional stock selection, particularly offshore. Our offshore equity benchmark did minus 12.6%, whereas the fund did minus 6.07% in rands. So stock selection exceptional offshore. We also had a relatively good year on domestic stock selection, and we beat the CAP Swix by 81 basis points for the year. What did we do wrong? Well, we probably could have had more cash exposure and less duration on bonds, considering a rising interest rate environment domestically. And we also probably could have had even less equity than we did own in the fund, albeit that we were very lowly exposed relative to peers. My concluding remarks in terms of our performance, it's somewhere between a 7 out of 10 and an 8 out of 10 for the year. We outperformed our benchmark. We added a lot of stocks alpha, which is what we're all about. But then we did not deliver on our inflation plus 5 mandate. The conditions just didn't suit it for the year, and that brings our score down somewhat. How are we positioned for the year ahead? Well, we remain more exposed to South Africa. The rand has appreciated significantly as we thought it would in the last few months. Our global exposure is still low in the fund, and we've got a gold position that's done well and we're holding it, as well as quite a heavy weight in fixed income. One concern we have is the discount to intrinsic value on our buy list, both in South Africa and offshore, has diminished a lot. So potential returns are now subdued. We expect that to mean that we'll reduce equity exposure even more in the fund. And with a stronger rand, it's quite probable that we might redirect capital back overseas. Been a good year. We're happy with the fund's outcome. We look forward to managing it in 2023.